Hi, everyone. Welcome to Unconfirmed, the show that reveals how the marquee names in crypto are reacting to the week's top headlines and gets the inside scoop on what they see on the horizon. I'm your host, Laura Shin, a journalist with over 2 decades of experience. I started covering crypto 5 years ago, and as a senior editor at Forbes, was the first mainstream media reporter to cover cryptocurrency full-time. Unchained and Unconfirmed are now published as videos. If you're not yet subscribed to the Unchained YouTube channel, head to youtube.com/c/Unchained podcast and subscribe today. Block Native is the easiest way to build and trade with mempool data. Hundreds of the top DeFi projects and traders have integrated Block Native's API. Learn why at blocknative.com. Crypto.com, the crypto super app that lets you buy, earn, and spend crypto. Earn up to 8.5% per year on your Bitcoin. Download the Crypto.com app now. Today's guest is Frank Chaparro, Director of News at The Block. Welcome, Frank.
Laura, thanks so much for having me. I just got back from Staples to get these new headphones. Did Bitcoin fall back below 40,000? I haven't looked at price in a little while. Where are we right now?
Well, last I checked, which maybe was like a half an hour or 40 minutes ago, it was at 38K.
Okay.
But I did see that it had dipped to 37 in the interim.
Oh, geez. And God only knows what the price will be when this gets out to your audience.
Ooh, are you going to drop some? Well, so that's why I invited you on the show. You are the first guest on Unconfirmed in 2021.
It's exciting. That's exciting.
I think we can all safely say that this is going to be a big year for crypto if the first days of the year are any indication. So you actually did write what your predictions are for the year, but before we even get into that, let's just look back at the similarly, I think, actually really significant year in crypto for 2020. Like, what would you say were the big stories that year?
I mean, if you look at the data, you have a number of big stories for 2020, right? The growth of the stablecoin market, seeing a supply above 5 billion, trading volumes reaching an all-time high, monthly high in the month of December. We put out a lot of figures around trading and stable coins in the past few weeks. And so you just saw the growth of the market and the build out of a more robust market structure. So I think that's kind of like the high level overview of 2020. And I think that's why investors right now are getting so excited about what 2021 holds, because you have this growth story from the year prior. So I think people are really excited, and you're right. It's going to be interesting to continue to watch, that's for sure. Aside from price, just the further development of the market.
Yeah. My 2 big takeaways, I think. Well, so first of all, I think partially because of the pandemic, Bitcoin, I think, was just like the big story last year. We just saw, I feel like, kind of a new type of person who was acknowledging what its merits were and getting in. And then, of course, the big news with things like PayPal and MicroStrategy and Square and MassMutual putting Bitcoin on their balance sheets. Like, I don't know if those things would have happened even without the pandemic, but, given what the state of the world was, I definitely feel like all those forces came together to create the perfect conditions. Yeah. And
it took a while, though. It took a little bit of a while. I remember at the beginning of the pandemic in March, when everything was falling, crypto and beyond, folks were kind of thinking that maybe crypto, Bitcoin specifically, wasn't living up to that safe haven characteristic that so many folks have attributed to it. And so, I think once we had the Poulter to Jones news come out, you kind of saw those dominoes fall with more investors, more hedge funds, and then actual publicly traded companies, and in some cases announcing that they'd be allocating to the space. And so it's been interesting to see that unravel.
Yeah. And the other funny thing is that early on in Unchained, I know. It was actually the first Why Bitcoin Now episode that I did with Mike Novogratz and Raoul Pal. And I did ask them, hey, like on Black Thursday, why did Bitcoin not act as a safe haven asset as everybody says it would? And they said, okay, maybe that day didn't, but we are seeing institutional investors who are viewing it that way and who are getting in. And I said, okay, well then why hasn't the price risen? And they said, well, it takes, these kinds of companies a while. And they were right. They were like, it's going to happen. Yeah. It's just behind the scenes right now. But one other thing I was going to say about your comments about kind of like just the maturation of the space in a way, what was interesting is like, I just feel like it looked quite different from 2017 in the sense that looked very thin and it was very much based on hype. And this time around, it feels like it's more based on substance, which, is more interesting to me. All right. So now
I just add one thing to that. Like the institutions really delivered in 2020 in a way that maybe the retail side of the market didn't. Like in 2020, we didn't see things like an ETF come to market, right? Which many folks think would, open up the floodgates to more retail participants, or firms like Charles Schwab or TD Ameritrade or Fidelity offer retail products, which many people were hoping that they do. But we saw, to your point, a lot of hedge funds and larger firms get in. So you kind of had this like tale of two crypto markets in a sense.
Oh, yeah. Yeah. And reversed from last time, because last time it was all this talk about the wall of institutional money that, did not materialize.
That did not come. Yeah.
All right. So let's talk about what you think will be the big crypto stories for 2021.
I think that, kind of adding to that point, I think we will be disappointed in some respects about the entrance of firms like Fidelity and Charles Schwab and TD. I don't think that we're going to see any type of retail crypto trading products come out of those firms in the next few quarters. On the flip side, we saw PayPal come in, which kind of helps to an extent, but we're going to see limited activity on the retail brokerage side. I think we're also going to see limited activity on the side of the large investment banks, in as much as I don't think that in the next few quarters, at least, they're going to be trading physical cryptocurrencies themselves, even though we have this guidance from the OCC that they can store crypto custody assets. I just don't think, given what I know about where these teams are, that they're going to be trading it themselves anytime soon. And the market is still, even at $1 trillion, a bit too small for them to do so. But we're definitely going to see the market continue to develop on the institutional side, with prime brokerage building out and firms like Genesis, Galaxy, and there are many other market-making firms, B2C2, which just got acquired by CBI Group. All of these firms are rapidly expanding their capabilities. So we're going to definitely continue to see that. We're going to see the headcount of these firms expand, in some cases double, in some cases triple from what they are currently, as they try to offer, deeper liquidity, more white glove services for firms that are looking to put on these large 100 million, 500 million positions, in some cases, a la MicroStrategy, a la Square. So we'll see more of that. I think we'll see, in lockstep with these trading capabilities expand, more publicly traded companies look to follow in the footsteps of Square and MicroStrategy to allocate a portion of their balance sheet to Bitcoin. I've spoken with folks like Michael Morrow, who runs Genesis Global Trading. He anticipates more than 100 companies that are publicly listed will do just that. So we're going to see retail brokerage sit on the sidelines. We're going to see probably investment banks continue to sit on the sidelines in terms of crypto trading itself. We're going to see still the trading market structure develop and change in many interesting ways. I think going into 2021, you're going to have firms like Coinbase and other exchanges experiment with new types of liquidity or market making incentive programs so they can bring more liquidity onto the platform. That could take the form of something like inverted maker. Traditionally, exchanges provide rebates to folks who are adding liquidity or making markets on their venue. You could see some schemes where they're actually maybe paying takers, which is something that Crosstower and Upstart Exchange does. But you're going to see across the board folks just experimenting with these fee schedules that they have. And as a result, potentially you could see those retail fees then maybe come down. And that could also be expedited by things like payment for order flow becoming more of a thing, so to speak, in the crypto markets. Basically the way that Robinhood and other brokerages and equities make money, you could see that continue to seep into cryptocurrency markets, which could also help with the fees. So that other element would be just the continual maturation and development of the market structure itself. So those are some of the main things that I'm going to be looking for in 2021 2021 and that I'm excited about.
So we're going to discuss a little bit more about how the crypto exchange business and some other businesses in the crypto space will change in 2021. But first, a quick word from the sponsors who make this show possible. Crypto.com, the crypto super app that lets you buy, earn, and spend crypto, all in one place. Earn up to 8.5% per year on your BTC. Download the Crypto.com app now to see the interest rates you could be earning on BTC and more than 20 other coins. Once in the app, you can apply for the Crypto.com Metal Card, which pays you up to 8% cash back instantly. Reserve yours now in the Crypto.com app. Back to my conversation with Frank Chaparro of The Block. So earlier when you were talking about how crypto exchanges might change their fee schedule, what would be the motivation for that?
I mean, basically, the idea is to just create a better product and a better market structure for their venue. It's something that, we see in traditional equities and folks that are working at firms like Coinbase. You have someone like Vishal Gupta, who's the head of exchange. They're trying to bring best practices from the traditional world to the cryptocurrency world to basically make for more efficient markets, more efficient pricing. And the fee aspect and the pricing aspect is one element. You're also seeing a number of firms try to improve the data capabilities of the market, right? So you look across Bitcoin, any observer or market participant knows that it's often difficult to know exactly what the price of Bitcoin is at any given moment. So you have a number of firms that are looking to remedy that and are looking to create new index products around the Bitcoin market to solve for that S&P 500. You have CBOE, which recently announced at the end of last year that they'd be getting into the market to solve for just that. So a lot of what these exchanges and new market participants are looking to do is improve the efficiency of trading and to make the market more robust. And you're seeing that happen. Even if you just look at things like spread and volatility, volatility relative to 2017 is a lot lower. And the spreads between the exchanges, the price at which Bitcoin trades across various exchanges has tightened as well. And so we're already reaping some of the benefits of these initiatives.
And at the end of the year, or really the latter half, we started to see a lot of big regulatory actions in the space. One of the biggest ones was against Ripple by the SEC. How do you think things like that will affect exchanges?
So I was talking with a head of an executive at an exchange who is responsible for aspects of the listing process. And so my thesis going into this year was that you'd have a number of exchanges think about clamping down on new listings or at least reconsidering the listings process. I think there's an aspect of that. I think exchanges are under pressure from a scaling perspective as it is to roll out new products, to onboard new clients. And so they don't want to get entangled in regulatory dramas related to listings. So maybe that would make them a bit more conservative or potentially delist things, which you saw with Bittrex, right? They delisted a number of privacy coins. And so, but there's also this other sentiment, and this is the sentiment that was expressed by this one executive that I'm talking about, which is you don't want to fall into the trap of every time a regulator says something about a coin that you immediately delist it, or you set the precedent that, it's kind of like the coin is, guilty until is guilty rather than, innocent until proven guilty. And so that's something that exchanges right now are being highly sensitive about in terms of moving too quickly. I think that's why you see Kraken moving a little bit slowly and why you saw Coinbase, which many people, even though they only took about a week, many folks thought they'd get that done or delist XRP within a day, right? And they're not taking an approach like that. And I don't think many exchanges are. I think the ones that kind of got out there really early on were maybe trying to do it for the marketing, but they're taking these decisions very seriously. And so I think you have these two forces, a desire to not, move too quickly and completely bend a knee to the regulators, which is very important in crypto, which is, to some degree, moving against the grain of the regulatory forces, but also this desire of like, or this, feeling of, I don't want additional pressure when volumes are exploding and Bitcoin is surging towards 40,000. There's just so many other problems I have that I don't want to bring regulatory issues in as well.
Well, so you referenced how Bittrex announced that it'll be delisting the privacy coins Monero, Zcash, and Dash. Do you think that this is just the start of kind of, I guess, delistings or suspensions of privacy coins from exchanges?
I think that this is definitely going to be something that could spill over into other markets. I think the fact that Bittrex did it was fascinating because they're not necessarily known for being at the forefront of handling regulatory affairs as well as some other exchanges. I think some folks might make that argument. So the fact that they got ahead of this early on, I think, is a canary in the coal mine, perhaps.
Yeah, I did see, though, Jesse Powell of Kraken, the CEO there, he said that he wondered if it was something specific to their exchange.
Mm-hmm. As in they facilitated certain types of transactions without doing proper KYC.
Something like that. But I did notice that the timing of it was around the same time that there were like new anti-money laundering initiatives that were passed in Congress, something like that. I actually should have looked up the exact news before I decided to spontaneously mention it on the show. But I remember thinking like, oh, I wonder if this also, like if they're just being extra cautious. But yeah, this is something I'm watching a lot because obviously with the regulations against self-hosted wallets and in general, just a lot of regulatory fire coming the way of privacy. Yeah, it does feel like this fits into a broader narrative as well.
And it's really tough right now for exchanges. I mean, on the regulatory side, I hear so many war stories out of, the legal and compliance department of these exchanges because it's really tough. And once you had the Treasury come out with this, proposal for rulemaking around non-custodial wallets, you just had across the landscape exchange compliance professionals working day in and day out around the clock to just get ahead of anything that could come down the pike. And I'm talking, 15, 16-hour days. So that's another story. It'd be interesting to see how that pans out in 2021. But so far, it's something that's really top of mind for a lot of firms.
Yeah. I'm really wondering what's going to happen. So one other huge crypto news event that's on the horizon will be the Coinbase IPO later this year.
Oh yeah, that's very interesting.
What are you looking for when it comes to that?
Oh, there's so many. I mean, we want to know what valuation, we're going to see this kick off. There's so many unanswered questions that I'm excited about finding out, like who are the other investment bankers involved, right? We know that Goldman Sachs is involved, but there's going to be quite a number of other ones who kind of assist in this process. You could see maybe Galaxy. I'd like to see a crypto native banking firm on the roster. So we'll be looking out for that. Also interested in like the form of the IPO. I don't think it's been reported whether or not this will be a direct listing or a traditional IPO or the new direct listing mechanism that the New York Stock Exchange just got approved, which is effectively a direct listing that allows for a capital raise in addition to the direct listing. So we don't have any of those questions answered to my knowledge.
Or whether there will be a coin component.
Or whether there'll be an Ethereum-based coin component, or whether it will list on New York Stock Exchange or NASDAQ. These are all open. What I do sense is that it's coming very soon, right? I had reached out for one story, and originally the firm sort of came back and said that they were in a quiet period. They then sort of came back and said that they weren't in a quiet period. So you're approaching this moment where, we're going to find out more information about the degree, or rather what this exactly is going to look like. So we're getting close. That we know for sure.
And when you say soon, last I heard was kind of like second half of 2021, but are you saying it could come earlier than that?
I think that it could come within the first half of the year. Yeah,
oh, wow.
Definitely. Yeah.
Okay, so the timeline's been moved up. My intuition.
You have the firm just recently hired a head of investor relations from Facebook to sort of, in the early stages of this process, You're going to want to do the roadshow. You're going to want to, build a book of potential investors from the public markets. And so that's going to be fun to watch. It's going to be interesting to see how Coinbase positions itself as a company to Wall Street, right? They're kind of many different things. They're a brokerage firm. They're an exchange. They have a Silicon Valley brand. The gentleman whom they hired is from Facebook. So that kind of maybe gives an indication that they're going to want to position themselves as a tech growth story rather than a sleepy, boring brokerage custodian. That raises the other question of who's going to cover this stock, which is a more wonky, pedantic question that may not be super interesting to your listeners. But is it going to be the guys who cover brokerage firms, or is it going to be the folks that cover exchanges, or the folks that cover, tech firms? So that remains to be seen, and it remains to be seen how Coinbase will shape that narrative. Obviously, there's one very obvious narrative of this being like the crypto company. So if you're uncomfortable getting some sort of exposure to Bitcoin directly, look no further to Coinbase shares. So we'll see if that works.
Yeah. In a way, the fact that Coinbase isn't easily categorized reminds me in a way of how cryptocurrency itself is also not easily categorized. So, I feel like there's just this new frontier that we're creating. Anyway, well, it's been so fun chatting with you. Thanks so much for coming on Unconfirmed.
My pleasure. Thanks so much, Laura. Happy New Year. Talk to you soon.
Same to you. Don't forget, next up is a weekly news recap. Stick around for This Week in Crypto after this short break. Today's episode is brought to you by BlockNative. BlockNative is the easiest way to build and trade with mempool data. Hundreds of the top DeFi projects and traders have integrated BlockNative's API. They even have Mempool Explorer, the industry's first no-code environment for working with mempool data. Mempool Explorer truly brings blockchain data to life, letting you watch mainnet transactions as they happen. Through the first quarter of 2021, Unconfirmed listeners get double the transaction volume on all BlockNative commercial plans, as much as $25,000 in value. Visit blocknative.com/unconfirmed to get started and claim this offer. Thanks for tuning in to this week's news recap. First headline: total crypto market cap reaches $1 trillion for the first time. With little hype compared to 2017, the total market capitalization of cryptocurrencies reached $1 trillion for the first time on Wednesday, with Bitcoin soaring to $37,000 3 hours after surpassing a new all-time high of $36,000. As of press time, the price breached $40,000 for the first time, a huge milestone for the 12-year-old cryptocurrency. JP Morgan analysts speculate that Bitcoin's price could reach $146,000 over the long term, with their strategists saying that the king of crypto is competing with gold for investment flows. Meanwhile, number 2 crypto, Ethereum, has surpassed $1,200, a price level not seen since the last bubble at the beginning of 2018. Amid these high-flying prices, the block reports that cryptocurrency exchanges are seeing high levels of traffic, with total visits in December alone reaching 196 million, up from 79 million a year prior. Coinbase, which will be going public later this year, struggled with connectivity issues for 6 hours on Wednesday before finally resolving the issue. Next headline: OCC says banks can use stablecoins. The Office of the Controller of the Currency published an interpretive letter on Monday saying federally regulated banks may use stablecoins for payments and other activities. They can also participate in blockchain networks. Kristen Smith, executive director of the Blockchain Association, tweeted, quote, "The letter states that blockchains have the same status as other global financial networks, such as SWIFT, ACH, and Fedwire." Next headline: Ripple and XRP Roundup. The fallout continues for Ripple after the SEC announced it was filing charges against the company and 2 executives last month. Tetragon, the lead investor of Ripple's $200 million Series C funding, has filed suit against the company in light of the SEC's charges. The complaint seeks to, quote, enforce its contractual right to require Ripple to redeem its Series C preferred stock, or, in plain English, give its money back. Tetragon is also attempting to freeze Ripple from using any liquid assets until the payment is made. Since the SEC announced the lawsuit, the number of XRP whale addresses has fallen more than 8%, as many prominent crypto exchanges have delisted or suspended XRP trading. Firms to have announced delistings and trading suspensions include Coinbase, Crypto.com, which disclosure is a sponsor of my shows, Genesis, Blockchain.com, and Binance US. Grayscale has also removed XRP from its large cap crypto fund and halted new subscriptions to the Grayscale XRP Trust. Bitwise has also liquidated its position in XRP from its Bitwise 10 crypto index fund. Next headline, Coinbase and A16Z prepare challenge to proposed crypto wallet rules. Top crypto exchange Coinbase and venture capital firm Andreessen Horowitz are planning to challenge in court the Financial Crimes Enforcement Network's proposed crypto wallet rules should they become law. Coinbase CEO Brian Armstrong and Andreessen Horowitz's Catherine Hahn announced their intentions in dual tweets on Monday. Hahn, a formal federal prosecutor, said the proposed rules by FinCEN to subject all crypto wallets, including those that are self-hosted, to know your customer reporting requirements would have, quote, many foreseeable and unintended negative consequences. The rule is also being criticized because of the rushed process by which it is being considered. As Jerry Brito of CoinCenter tweeted, the original official deadline given was January 4th. However, on that day, the deadline was extended to January 7th with a quiet change on the website. As he tweeted, quote, commenters raced to honor the January 4th deadline and were never notified of a change before the end of that day. As a result, they were effectively afforded not the promised 15 days, but only 12. He added, serious commenters could have used the 3 extra days. This lends more fuel to the contention that the process violates the Administrative Procedures Act. Next headline, Vitalik breaks down rollups. Scalability has been the big issue facing Ethereum, well, ever since inception, but even more urgently since 2017. This week, creator Vitalik Buterin published a post explaining the differences between the 3 major types of Layer 2 scaling currently available: channels, plasma, and rollups. But he does a deep dive on rollups to explain why they, quote, are poised to be the key scalability solution for Ethereum for the foreseeable future. There's a detailed explanation of the 2 different types of rollups, optimistic rollups and ZK rollups, including a chart laying out the trade-offs between the 2 and how much scaling you can expect to receive with rollups. Vitalik's take is, quote, in the short term, optimistic rollups are likely to win out for general purpose EVM computation, and ZK rollups are likely to win out for simple payments, exchange, and other application-specific use cases. But in the medium to long term, ZK rollups will win out in all use cases as ZK Snark technology improves. Next headline, Shapeshift goes full DeFi. Shapeshift CEO Eric Voorhees announced on Wednesday that the trading platform, quote, has integrated decentralized exchange protocols and is sunsetting its 6+ year business of trading with customers. The change means that Shapeshift users will no longer be required to provide personal identifying information to use its services. Instead, it has integrated with DEXs including Uniswap, Balancer, Curve, Bancor, Kyber, 0x, and half a dozen other DEXs. Voorhees says that this will allow Shapeshift access to more jurisdictions since the company will no longer be an intermediary. Time for fun bits. The Block's 2020 year in review. If you were intrigued by what Frank was saying about what happened in 2020, check out the Block's yearly review, which highlighted what it calls, quote, 10 developments that solidified the future of cryptocurrencies in 2020. The recap starts with, of course, the biggest story of the year, Bitcoin, noting that its total market value crossed $500 billion. The emergence of stablecoins as critical infrastructure and the rise of DeFi are also covered, and retail and merchant access through Square and PayPal is as well. It's a good, comprehensive look at the major trends of the last year, and it ends on regulation, which I think we'll see is a big driver of news this coming year. And there's a second fun bits, which is XRP Army storms SEC. Leave it to crypto Twitter to make a mashup of big news from the crypto world, which is the SEC's lawsuit against Ripple, and the real world, which in this case was the mob that stormed Capitol Hill on Wednesday. Small Ting tweeted, of course, in all caps, breaking news, XRP Army has stormed SEC headquarters. All right, thanks for tuning in. To learn more about Frank and his 2021 predictions, be sure to check out the links in the show notes of this episode. And don't forget, we are now on YouTube. Subscribe to the Unchained YouTube channel today. Unconfirmed is produced by me, Laura Shin, with help from Anthony Yoon, Daniel Ness, Bossy Baker, Josh Durham, Shashank, and the team at CLK Transcription. Thanks so much for listening.